Investment versus speculation. Now, people have many misconceptions about the meaning of or the difference between investment and speculation. Maybe sometimes may confuse about what is investment and what is speculation, and they don't know exactly the difference between investment and speculation. That's why today we are going to discuss about what is the difference between investment and speculation. This is what the agenda. Let's see the agenda of this particular topic. The concept of investment and speculation. Now, exactly let's try to understand what is exactly investment and what is the speculation is. Also understand the difference between investment and speculation, whether investment is good or speculation is good, or whether who will do the investment or who will do the speculation. Now, let's see the brief difference between the investment and speculation. Now, let's see the outcome. So, what exactly that is the outcome of this particular lecture. Able to understand investment and speculation, you will be able to understand what is investment and what is speculation, and also capable to apply the concepts in the real markets. So, you will understand being an investor, whether you want to be an investor or you want to become a speculator, you will take a decision based on this presentation. Now, for the difference between investment and speculation, to have an idea about what is the difference between investment and speculation, there are different bases through which we can see the difference between investment and speculation. Those are meaning, basis for decision, time horizon, risk involved, intent to profit, expected rate of return. Now, let us see the meaning. So, in terms of meaning, what is the relationship between the investment and speculation? Now, let us see first investment. In the economic sense, an investment is the purchase of goods that are not consumed today, but are consumed in the future to create wealth. So, investment is nothing but the sacrificing the today's spendings, but to create some wealth for tomorrow. So, today if we invest money, so that you may not have that money for current consumption, but if you park your money in some investable assets, so that the assets will multiply your money and in the future it will create wealth for you. That is what is investment, and the example for investment is investing in equity for 15 years. Now, let me tell you investment, how the investment makes sense for different people. The investment for a person like person between 25 to 30 years, he looks at an investment as one of the greatest opportunity for making investment in equity, so that he can wait for a longer period of time, and during this longer period of time he can put money in equity, and finally the money can be multiplied over a particular period of time. That is how investment can be involved in the purchase of goods, but can create wealth for tomorrow. Many people can invest are investing in different investable assets like equity shares, bonds, debentures, and many other investable assets. On the other hand, what is the speculation is? In terms of meaning, speculation is an act of conducting a risky financial transaction in the hope of substantial profit. So, now there are two terms here which are substantial profit is the one, and the other one is act of conducting a financial transaction. Now, here substantial profit. So, being a speculator, what you expect is, you expect a substantial profit or the profit in a very limited period of time. So, the substantial profit can be expected in this speculation. At the same time, it is an act of conducting a risky financial transaction. So, now for expecting a very high return, you would have to involve in a very risky investment, or we call it as risky financial transaction. So, by investing your money in a risky financial transaction, you are expecting a substantial profit. So, that is why speculation says that you go for the risky financial transaction, so that you can expect a high return. but at the same time it is just an expectation, it is not a realized return. So, in fact, most of the speculators lose money by investing in by making financial transactions in risky assets. Now, let us see some examples about the speculation. Trading in equity for intraday, the equity investment and also equity trading. So, both we can see here in the prior, that is investment, we have seen the investment in equity, but whereas in the second example we can see the trading in equity in the intraday. So, trading in the equity in intraday is termed as speculation, but whereas investing in equity is termed as a investment. So, for a clarity in terms of meaning, the investment in equity has the long period of time where you will lose your, where you will sacrifice the current spendings and wait for the future and your wealth will be created. Whereas in the speculation, where you will wait for a very lesser period of time and take the risky financial transaction and finally you expect a substantial profit. And of course, the expectation only can happen, it may or may not be realized in case of a speculation. That is why that is the difference between in fact the investment and speculation. Next basis is basis for decision. In what basis that you are investing, or at the same time in what basis, for what basis you are making or you are doing the speculation. Investment, the basis for investment is the study of economy, industry and company fundamentals. So, on what parameter that you will go for an investment is study of the economy, industry and company fundamentals. Now, you will see the study of three things. One thing is economy, and the second thing is industry, and the third one is company. So, studying these three parameters, only you are going to take a decision in the investment. So, for example, in equity, in economy. So, what you will study in the economy? Say for example, I want to invest my money in Indian stock markets. So, to invest your money in Indian stock market, you should study the Indian economy, whether Indian economy is performing well or not. There are many variables that are available for studying the economy. For example, inflation rate and the total savings that are happening in India, and also the interest rates, whether the interest rates are increasing or decreasing. At the same time, industrial development, at the same time the overall output of the country in terms of GDP or GNP, etc. So, these are the different variables through which you can see, you can observe whether the Indian economy is performing well or not. And then you will see the, or you will study the industry. Say for example, I want to make an investment in India in petrochemical sector like IOCL or like Reliance Petroleum or so. In such a scenario, I will also study here, have an understanding about the industry petrochemicals. What is the status of, present status of petrochemicals? Whether petrochemicals industry is growing or petrochemical industry has any problems. So, we will study the different parameters related to industry and also have an understanding whether this particular industry has the attractiveness for investment in the future or not. At the same time, we will see the company analysis, study the company analysis. In the company analysis, we will study whether a particular company is performing well or not. In terms of the performance, this company means the company where I am going to invest, whether this company is a better performer than the other competitors or not. So, in this way, we will study these three analysis for making decision in investment. The reason being, you will have to wait for a very long period of time after making an investment. That is why you will have an understanding, in-depth understanding about the economy, industry and company, and finally you will take a decision for investment. Take an example here, you can take an example here, investment in Apple company. We study the economy, software and hardware industry, and finally the Apple company performance. So, when these three are attractive to you or have any insights that you can gain some good profits in near future, then you can make an investment in this Apple company. Now, speculation. What is the basis for investing in speculation? The basis for investing in speculation is sentiment analysis. Because being a speculator, what I will do is, I will put my money in a risky financial transaction and for a very shorter period of time. Since I make my transaction in a very shorter time period, what my point of interest is, in this particular point of time, what the participants are, stock market participants are thinking about. Say, sentiment analysis is one of the particular analysis conducted by various technical analysts. So, where what they do is, whether the sentiment of the participants in a particular company is good or not will be studied. So, there are many parameters to study the sentiment analysis, like online surveys, and also like the opinion about the people, whether to go for an investment in the particular company or not, and also on periodically the different stockbroking companies release the reports. So, in those reports also you will see the sentiments of that particular company, whether the company is attractive for the speculation or not. And also study of technical charts. So, technical charts also are one of the important area where analysts are involved in analyzing the particular stock prices through various parameters like technical patterns. There are different technical patterns like head and shoulders, or the bottom top, or any other technical, or peaks and lower levels. So, these ways that we will understand, we will study the technical charts, and these technical charts also let the speculator know about the immediate movement of the particular stock and take a decision. Along with that, market psychology, whether the market psychology is good or not, various reports are being published. You will also have an understanding about these reports, and finally take a decision on speculation. In common factors for speculation, these are the main common factors for taking decisions on speculator decisions. Now, by studying these few information sources, a speculator normally take a decision for speculating in the stock market. The best example for the speculation is, take a decision during intraday. Speculator has to analyze the charts in news for taking better decisions. So, normally what happens is, the charts chart will show you whether the stock price is going up or going in the upward direction or downward direction. Normally, by let's say for example, a chart pattern has formed in this way. In this chart pattern, normally what people could understand here is, in the bottom level, people try to understand whether the stock is going to bounce back. So, now speculator will enter here, and immediately in the next coming uptrend, the speculator will going to close the position. So, in this way, in the very short fluctuations in the market, they try to capture the market by speculating in the stock market. But anyway, the speculation is of very risky financial transaction. There are chances of losing money when you go for a speculatory kind of activities. Now, let us see the time horizon. What is the time horizon for the investment, and also what is the time horizon for the speculation? In case of investment, the investor has to wait for a longer period of time to achieve the consistent and better returns on his or her investment, say 15 to 20 years. Now, being an investor, you should have to make an investment and wait for about at least 15 to 20 years. So, normally investor will do lot of analysis, lot of study on whether to go for an investment or not. After that, once he make an investment, then he will take sufficient time for parking their funds in the particular company. The reason being, the companies will utilize the funds and do the business, and during this 15 years time, the companies are going to excel in their business. So finally, after 15 years or 20 years, the companies are going to earn some profits, and the part of the profit is shared to the shareholders. That's why being an investor, the investment horizon is very longer time period, where the investors have to wait for almost 15 to 20 years to generate some returns. So this is the way the investors have to wait for a longer period of time in case of investment is. And in fact, the investment for a longer period, like why you will take a longer period for the investment is, in the investment, even though there are some fluctuations in the market, you need not to worry about these market fluctuations, because in the investment you will wait for a longer period. Since you wait for a longer period, so that whatever the mid-time fluctuations that are happening in the stock market cannot affect your investment at the end. That's why being an investor, if you are long-term investor, definitely markets won't hit your investment, and it is certainly you will gain good return at the end of the period. But on the other hand, speculation, the time period for this speculation is very less, usually a day, week or a month. So speculators can't wait for a more time, because it's by nature of the speculation, they cannot park their money for a longer period. They expect substantial profit in a very shorter period of time. It can happen only within the day also. They can put their money and pull back their money from stock market, and also in a week also they can put their money and pull back their money. At the same time, it can happen even in 1 month also. But only idea here is involving in a very risky financial transaction for expecting a very substantial return. That's why the speculation comes in a very shorter period of time. So there is no much more analysis that is happening in the that happens in the speculatory kind of decisions. That's why they may be end up with the losses also. Now, the next topic, the next basis for comparison is risk involved. What amount of risk that is involved in investment, and what amount of risk that is involved in speculation. Now, let us see the amount of invest that is involved in investment. If you see the particular graph that is apparent here, this particular graph is showing the stock prices from 2005 to 2020. So almost 2005 to 2020, almost 15 years data of this particular stock we have taken. This stock is Cipla. I think you might know about the Cipla. Cipla is one of the company that is comes under pharmaceutical sector. So this Cipla company share price in 2005 is here, means around it is at 100 rupees. So in 2005 the stock price is about 100 rupees. At the same time, in 2006-07 the stock prices have gone up and then decreased in 2008. I think you might have heard about the 2008 crisis. So during this crisis the stock markets have fallen. So the stock price also have fallen to some extent, and then the markets have picked up its momentum. The stock price has getting increased and again getting increased, and in 2015-16 it has reached to the top position. And after that the stock is getting stabilized in 2016 to 2018-19. Suddenly in the 2020 corona pandemic situation, the stock markets have suddenly crashed. During this particular crash, the market has hit the particular stock, and suddenly it has came down from 638 levels to almost 400 levels. The stock market, the stock price has came down. That's why the stock price in 2005 is around only 100 rupees. But whereas the stock price in 2020 it has gone to almost 630 or 640 rupees almost. So being an investor for about 15 years, let's assume what kind of investment that you have done and what kind of returns that you have achieved is, your price of rupees 100 have increased to 640, means almost 6 times more than 6 times return have been achieved by you by investing your money in stock market, especially in this particular share. So, being a speculator, being an investor, you will have what kind of risk that is involved in this equity investment is, you see this during this period of 2005 to 2020, almost your stock price has increased, but during this 2005 to 2020, sometimes the stock market price, the stock price has fallen down, but by then, since you are there in the stock market for a longer period, these downfalls in the stock market won't affect you. That is why the risk involved in this investment is moderate. Now, let us see the risk involved in the speculation. Let us say this is what the same company Cipla company share we have taken on July 13th July. So, in 13th July 2020 we have taken. On this particular day, the stock price has opened at around this particular level. This is around 641, around 641. 641 is the range the stock price has opened. This is Cipla, and once it opens, then it has came down and then increased and then decreased, and at the end of the day it has settled down at 638.8. Means, being a speculator, you will analyze these stock charts and you will take a decision. So, for example, if you take a decision to speculate in this particular stock, in a very short period of time, there is an increase in the market, there is an increase in the share price and decrease in the share price, and in case if you take a wrong decision here, and finally in the end, at the end of the day itself, your price will, your stock price has came down. That's why your you may be end up with some losses. That is why this speculation always involved in a very risky financial transaction. You will enter in the morning and you will exit in the evening. So, in the meantime, the shortest fluctuations in the market may hit your speculated money, and finally at the end of the day you may be ended up with the losses. So, 641 to 638.85 is the end day close price of the particular stock. So, you may be end up with a loss also. That is why the risk involved in the speculation is very high. And then another basis is intent to profit. What is the intent for getting profit in investment and also in speculation? See, intent to profit is the investment intent is the value change. So, being an investor, you will make an investment and wait for a longer period of time. So, you expect a value change in the company. So, you do not expect, you do not only expect the price change of the particular investment, also you will expect what is the value change in the particular investment. So, I am making investment in Apple company. Now, when I make an investment in Apple company, in terms of value proposition, what the value it has been created, it is going to create in the future. So, the value is the only intent for making making investment in this particular company. That is why the intent to profit for investment is value change. So, that is broader perspective, and investor wait for a longer period of time and observe the shareholders wealth, whether it is increasing or decreasing, and also you will see how much value that it is creating to the society and the shareholders or its stakeholders at the end. But for the speculation, the intent is only price change. So, because you are a risky financial transaction holder, so what you will do is you will make an you will make the transaction and you will wait for a very less period of time. So, that is why what your point of concentration is price. So, you will see whether the price is getting increasing or not. So, you will if the when the as soon as the price increases, then you will see some change in the price, and you will have some kind of profit. So immediately you will exit with a small profits, whatever that you get it. That's why the time horizon for the investment is very the intent to get a profit is only price change, because the time involved in the speculation is very less. And then expected return. What is the expected return, rate of return in speculation and also in investment? The investment, the modest rate of return is expected, but the possibility of expecting getting realization of this particular return is very high. So being an investor, you will invest your money and wait for a longer period of time. Since you wait for a longer period of time, so you will whatever the misconception, whatever the expectations that are there for you on this particular investment will be realized, because whatever risk that is happened to your investment, that is being adjusted for the time period that you are waiting. That's why the modest rate of return is expected in the case of investment. But whereas on the other side, in the speculation, a very high rate of return is expected, because you are making risky financial transaction. So your expected rate of return is very high. So in finance, there is a standard notion, that is high risk high return and low risk low return. So in investment, you will take the low risk, that's why your expected rate of return is low. But whereas in speculation, you will take the high risk, that is why your expected rate of return is also high. So this is what the expected rate of return, and again what we can say here is, this is what an expected rate of return, but the realization is something different. The possibility of realizing your returns is very high in case of investment, but the possibility of realization of this particular return is very less for the speculator, being a high risk element is involved here. Now if you summarize the concept, the investment has the applications in professional life and personal life as well, because you will make an investment for your company or make an investment for your own self also. That is why the concept has very good application in terms of your professional development and also your personal development. And also there are various bases for comparing the difference between investment and speculation, and investment has the greater scope than the speculation when comparing between these two. I hope you all have an understanding about the difference between investing and speculation. Thank you very much. Okay. Now let's have a understanding about the what level that you have an understanding of this particular topic, investment and speculation, through a small quiz. The risk in investment is higher than speculation. What do you say, whether it is true or false? Just thinking about it. Now at the end of the questions, I will reveal the answers. Usually the time horizon for investment is higher than speculation. What do you think, whether it is true or false? The term value change is related to investment. What do you think, whether it is true or false? The basis for taking decisions in speculation is dependent on studying the financial reports. Do you think it is right, or it is true or false? The expected rate of return in investment is higher than speculation. So what do you think, whether it is false or whether it is true or false? I think you have answers with you. I reveal the answers, you will check it. So now the risk involved in investment is higher than speculation. It is correct, because the risk involved in investment is higher than speculation. So the risk involved in investment is higher than speculation is false, because the risk involved in investment is very less when comparing to the speculation, because in speculation you will take a risky financial transaction for expecting high return. That is why the particular statement stands false. Usually the time horizon for investment is higher than the speculation. Yes, it's correct, because the time horizon you will have to wait for years of time, 10 years to 15 years. So, you will have to wait for the longer period. So, that is why this statement is true. And the term value change is related to investment. The value change is related to investment, exactly right, because the basis for investment is value change and the basis for the speculation is a price change. And the basis for taking decision in speculation is dependent on the financial dependent on the studying the financial reports. So, normally speculation is a speculator does not study the financial reports, he only study the charts of the financial charts of the various stocks. That is why the statement stands false, and this is true. And the expected rate of return on investment is higher than the speculation, it is again false because it is less. So, that is what, and this is what the disclaimer for the day's lecture. Thank you very much.